In the evolving landscape of technology and finance, venture capital firms are increasingly prioritizing ethical and sustainable investment. Ficus Capital, the world's first ESG Islamic venture capital, exemplified this by combining ESG criteria with Sharia-compliant ESG-i in their investment. And in partnership with INSAF University, they have developed an ESG-i framework to guide MSMEs towards sustainability and innovation. And to help us explore further strategy of fostering industry innovation while maintaining high ethical standards. Ready on the line is with us Rina Neoh, the co-founder and co-managing partner of Ficus Capital. I want to say thank you very much, Rina, for joining me. Maybe firstly, you can share with us, how does ESG-i investing Ficus Capital differ from ESG investing and Sharia investing on its own? And why did Ficus adopt ESG as a venture capital strategy?
Thank you for having me, Nina. Well, I guess, Sharia investing or Islamic finance has been around for a long, long time, and the same as venture capital as well. The reason why Ficus, have actually adopted this theme, as in all venture capital, when you start a VC fund, you need to basically say what areas, what categories, and what industry you want to invest in. Ficus, when we first started, we call ourselves a Sharia compliant Ficus fund. That's because my partners, they were in the Islamic finance before, and there is really a gap. I mean, there are approximately 1.8 billion Muslims globally, representing a quarter of people on earth. But despite these numbers, I think there's been underserved by the asset management industry, with very limited innovation in product offerings and low growth in assets. And, while this is the core strength of my partners, my experience is in venture capital, is in investings. And when we come together, we do see that ESG, and Sharia, there is really an overlap. Of course, both have got frameworks, and both have got their principles, but the sectors that they prefer, or they allow to be invested in, there's a cross, right? But one of the consequences is that many sectors which are excluded under the Sharia law also score poorly on sustainability criteria. So, like Sharia investing, where application of Sharia principles is open to interpretation by the scholars, there is also ambiguity in the application of sustainable or responsible investing. So these two differences, while there are vast differences, there are also similarity. And both approach, is basically focusing on people, planet, and profit, but ethical profit. Yeah, so that's the reason why we see a gap in this space. And for me personally, I think most of the startups did not make it. Mostly technology startup, not because they harm the environment so much, but mostly lack of governance. That is one of the reasons why most of the startups did not make it.
And we want to see, how do startups funded by the Ficus Capital that are ESG-i compliant benefit from this?
Of course, we do this because we want to prepare our investee portfolio to actually raise more money or to go to a bigger market, where if we're all aware that most of the PE firms, or if they want to perhaps exit, they have to be acquired by bigger firms, or they can actually go IPO. And as we all know, most of the exchange have mandated that companies that is going to be IPO have to be compliant, although most of the time it's voluntary now, but we believe that it is going to be, a law soon. So in Ficus, there is a process how we evaluate startups. Most of the startups that we invest in are technology startups. So by default, all companies are Sharia compliant until it is proven it's not. However, in the assessment, we do actually have an extra step in our due diligence that we have our own framework. The framework that we co-develop with INSIF universities, that we check on criteria that is, beyond the usual VC due diligence. Most of the time, VC due diligence is on financials and on IP, technicals, and of course, legal. But there are certain things that we Ficus look for beyond these usual investment criteria. And of course, there are two distinct things. Of course, we don't invest in all the haram industries. But for example, like in tech industries, gaming or esports, the gray area. When we come across such challenge, we see that esports is a growing market, but there is some sort of element of betting, which is not in compliance with Sharia law. What we do is in Ficus, we have a Sharia committee or Sharia advisor. We actually go back to the advisor and ask, to seek counsel with them and to see how we can actually, come up with a solution. The other thing is that in embracing Sharia investment, the investor, in this case Ficus, takes equal risk with the founder or the founding team. So, without going into much details, our term sheets are actually more fair to the founders. We've heard that, VCs, have actually imposed, very, not that friendly terms into founders. But we do say in all, in a summary, I could share that if there is upside, we take equal shares. But if there is downside, the investors also have to take the equal risk. That is the part that I really liked as well, because we are in these, for a long term. It's not that the VC is there just to make a profit. We have to take equal risk as well.
And Rina, maybe you could share with examples of startups that have successfully aligned with ESG-i principles, and what are the impact that they have had on the market and even the whole ecosystem?
Well, I guess this is something new in the industry. In fact, there are talks, within the Malaysia government years ago to have a Sharia compliant fund. But to be very frank, the ESG-i framework is really just being coined. However, all our investee companies that Ficus have invested in have actually gone through this process. I wouldn't say that they have achieved major milestones of success. But what we have done is, this is an internal process that we want to make sure that they are actually compliant, even at the very early stage, because we're preparing them for the next growth stage, where they will be pitching to bigger funds or even like PE companies, or they potentially may be acquired by a big companies that requires all this. So being compliant, it gives the founder a lot more insights besides what they're measuring. Like all startups, they're measuring on growth and all this, but these little things that ESG framework requires the companies to measure is something sometimes intangible. For example, the social part of it. Growing a company is sometimes difficult because you depend on people. So most people said that startups are too busy, for survival. They don't have to actually comply to any rules and regulations. We understood that, but we believe that if we give them this kind of awareness, and make it a habit in their reporting, when they really need to disclose, they will be ready. And I think some examples that I could share perhaps in other bigger companies is that they have got better valuation when they were acquired by PE funds, or they were given a better valuation simply because they are ESG compliant, and the acquirer or the investor is assured that this company is sustainable. It's not just a fad, high growth, and then they just suddenly disappear. So what I can assure you is that all the companies that Ficus has invested in, Aclimo, Simplify, Assembler, and a few more that we hope to announce, they have all gone through these stages of ESG-i assessment before we invest, and also during the process of investment, the term sheets and even post-investment, which is very important, consists of these monitoring frameworks as well. So one of the company that is not in our investment, but is a Muslim company, Muslim Pro, for example. I think they are in the Islamic Sharia space compliant startup. They have recently raised, I think, 20 million US dollars. I think LPs or limited partners or institutional investors, they are actually looking at this space very aggressively. There are also VCs like us, bigger VCs, East Ventures. They have, actually come up with their own suggestions to their portfolio companies. Even VCs have to, produce our own sustainability report as well. So I think, for Ficus, we are, taking the first step to do it. If you ask us, as a fund manager, do we have to do it? Actually, not really, but we prefer to do it so that everybody has a upper hand when we really need to comply.
Oh, when you mentioned that you guys prefer to do it, what are the challenges and opportunities that a capital firm has encountered in investing within the tech startup that meet ESG-i criteria, and how has all of the problem challenges has been addressed?
Okay, there are of course many challenges. One of the challenge that we face as an investor is always data, and we all know that ESG. One of the challenges really when you disclose, you're disclosing data. There might be vast data, but how do we know which data is actually material to you? So I think limited availability of data or comprehensive data, ESG data or Sharia data is actually one of the challenges for not just VC fund, but for everybody else. And then I think the varying interpretation of ESG and Sharia guidelines. Of course, Sharia guidelines are also interpreted by scholars. And we know that ESG standards and frameworks are evolving every day, faster than we change clothes. That leads to, inconsistencies in screening and evaluation. So I think that leads us to say, okay, since we are all faced with all these uncertainties and ESG jargons, why don't we actually help these companies, especially the micro SMEs, that leads to our collaboration with INSIF University. So if you have had a chance to look at the INSIF, framework, they have actually come up, with a very clear framework that is applicable to micro SMEs. There are many ESG frameworks. MITI has one, SME Corp, the Lestari, but they lack the Sharia component. And of course, I think the international ones maybe is not applicable for local SMEs. So opportunities, of course, there are vast opportunities. It is a growing trend, and we feel that if we are prepared, we will have an upper hand in when we have to compete. For example, if a startup A can produce a sustainability report or ESG-i report, and can consistently show the potential investors they're doing the right things right, I think these companies would have a better chance in attracting money compared to someone who just can show the default or the usual financial legal. So we see that this is the way we want to nurture our companies. Ficus is not a big fund, so we feel that if you're not a big fund with a lot of money to throw, you really have to do what you have to do, which is to really nurture your portfolios, so that they can be vastly different from the others.
And what are the future trends that you anticipate in the integration of ESG and Sharia principle in venture capital investment? And what are your plans to adapt all of these trends?
I think we anticipate a continued rise in the integration of ESG and Sharia principles. We have actually seen it from the bank's, investment outlook as well. I think this is also driven by the increasing global awareness of sustainability. Bursa has mandated listed companies to disclose, and of course, a growing Muslim population, and even family offices, institutional investors, they are all seeking, ethical investment opportunities. I think this trend is likely to stay. And we have seen there's so many green finance, products have been launched. But I think there is maybe a little bit lesser options for startups or VCs. Micro SMEs actually is actually a core of Malaysia's economy, especially those who are exporting. I think they have no choice but to comply with the regulations in EU or in overseas. So it is important, especially when scope 3 of the ESG compliance has been mandated. A lot of these small companies will have to comply, and technically I think they do not have an idea how to comply or how to start. Resources and expertise is always a challenge. So Ficus, as a small VC fund, we do not have the capability to do everything. That is why one of the strategy is to partner with, the knowledge and experts, for example, like INSIFT, for the Sharia part. And I think we're very thankful to the ISRA for actually working with us to come up with a framework. And hopefully this framework sets a stage, as a starting point. I was made known that there will be a portal that's going to be launched. So any of the micro SMEs can now access the ESG-i assessment, and you will be given a report and where you stand. To me, I think the assessment framework is basically just like you going to a GP, taking a health check, of your own health. In this case, your company's health, not just financially, but overall, a more holistic, where you stand right now and what is material to you or material to your stakeholders, so you know where to go. It's like, you're not doing so good in your social part because all your employees are not happy, so therefore you know where to improve, right? I think if you do not measure things that is important to you, you will never be able to improve. So we are definitely giving a lot of attention in this space as part of our investment process.
Definitely, this is a very interesting session. I want to say thank you very much to Rina Neoh, the co-founder and co-managing partner of Ficus Capital, for helping us understand the future of ethical investing and how their model sets a new benchmark for sustainable and even a responsible innovation. Definitely, I want to say thank you very much. And all of our discussion here will be featured in astroawani.com and across all social media platforms.